Hey everybody, good morning. How are you? My name is Pete Renzulli. Welcome to Stock Trading Pro, and more importantly, welcome to Stocks for Breakfast. We have a ton of stuff to talk about today. Probably the number one thing is, has the stock market topped out? Has all of that rocket fuel that AI has given to technology stocks kind of worked its way out? Has the jet fuel kind of ran out? Where are fund managers seeking new alpha right now? That's actually the big question right now in the stock market is, where is the next place to put your money to get that next push? It's very, very big conversation on Wall Street right now that most of the tech stocks that had a really big rally are kind of pushing that valuation envelope right now, looking for a new catalyst. And I think probably the top of that story right now is AMD, a stock that we trade pretty much every day in our community, seems to have topped out. We're going to take a look at that chart. We also have another chart. We're actually going to say, is AMD topping out? And we have one other stock that we're going to be taking a look at and say, is this stock bottoming out? We got a lot of validation from the charts, both in price action and volume. 2 days last week, the stock had these big green candlesticks with heavy, heavy volume. And I'm going to show you that chart in a second. We're obviously going to break down the news as well. There's a lot going on in Russia right now that's really affecting things. OPEC actually also talking about production again. It seems like every other day they're trying to boost that price up. But what sectors? This is the big thing. Now you start to read these headlines and you really want to stay on top of, okay, I saw that headline, but what does that actually mean for a trade? So now we're talking about OPEC, we're talking about Russia, and where would that affect things? What group of stocks has been really, really strong the last 3 to 6 weeks? And I think unusually so. Now, unusually so in the severity of the strength and how strong that group has been. And there's actually two of them, airlines and cruise lines. And will they get affected by all of this news in Russia and what OPEC said? I actually think they will, actually. Something else we want to point out, we're actually going to show you in the newsletter today, is why we are actually looking at some pretty obvious signs in the stock market from last week where we saw profit taking and maybe even short sellers kind of dipping their toes in there. Which, look, let's face it, short sellers and all that bearish negative headlines have been slowly getting creamed as the market continues to jump up. Everybody's talking about an inverted yield curve and the recession and inflation, all that kind of stuff has not stopped the bulls and maybe even the algos just continually to grind that thing higher. And it's kind of funny. If you've actually been trading stocks for a while, or really trading anything for a while, you kind of know that when you get to that uncle point where you just can't hold that position that's moving around against you anymore, that's the moment when it usually starts to go in the other direction, that maximum pain, that uncle point. And I think that the short sellers probably got to that point in the last week or so. But what we ended up seeing on Friday especially, and I'm going to show you this in the newsletter, and you can actually grab your copy of the newsletter in the description below the video. We had 28 stocks that had double normal volume on Friday, and that is a big number. That's actually 4 times the normal number, other than an option expiration date, but 4 times the normal number. So what does that imply? That's a big part of what we're going to talk about right now. So, boy, we got a lot to cover. Stick around. I'll be back in just 1 second. Okay, so thank you so much for being here today with me. Hey, Timo, good morning. Good morning. How's it going? Gardner, good morning. Mike, how are you today? LJ, of course, always a pleasure. And Yamit, good morning. How are you, Yamit? Good morning today. So we're actually going to start out with a little bit of news. So let's actually hop on into here and something that we talked about. But I just want to give everybody a heads up. Again, you can click the link below in the description. You can actually download your copy of this today. Okay, so it's very, very important. But we want to start out with some of the bigger picture stuff here. So obviously OPEC came out. And if you haven't been following crude oil and how crude oil has actually been affecting some of the stocks. So we can actually take a look here at crude. And it's up a little bit this morning, but not exactly rocketing in the other direction. This $82 level has been the level. But the bigger picture is this big move to the downside. And this bearish move in crude oil has led to some amazing, amazing opportunities, probably in some areas that you might not be paying attention to. And if you haven't watched these stocks like Royal Caribbean, CCL actually is scheduled to report today. I'm not sure if they have yet, but they're scheduled to report today. So these stocks have actually been rocketing higher as crude oil has been going down. So if you happen to be involved in some of these ideas right now, you really need to determine what scenario would make you kind of get out of that trade. Now, a lot of people keep it simple and usually just use some sort of a moving average as a trailing stop loss. Completely depends on how long you plan to hold the trade. And that's actually a big part of trading as well. Prior to putting the trade on, you need to know what kind of profitable strategy you plan to use. Now, if you really want to level yourself up a little bit, there's different market conditions that will call for different profit-taking strategies. So, for example, let me show you this chart right now as we kind of work our way through. So this is actually a larger list of stocks that we had. And we could take a look over here as well. This is the last week. This is a filtered list of stocks that I look for to determine they have institutional attention, they have enough volatility, they have enough volume, so they at least go into my list. And this list is roughly around 400, 425 stocks. This is the last 5 days of the stock market in these lists. Now you can actually see Meta, Adobe, a couple of other pockets of opportunity, but for the most part, the market saw heavier volume and some pullbacks last week. So remember, we're tying this all the way back into if you happen to have some profitable ideas in CCL or even RCL or some of these ideas that have recently been breaking out. And quite honestly, the home builders, which we've been banging the drum on for a long time, what do you do if this bigger picture window starts to work its way into the market and we start to pull back? Now, in our community, we have something that's called the profit maximizer. And, there's so many different ways to do it. The one thing that you need to do, though, is you need to recognize the current market conditions, which we just showed you are kind of getting a little bit more murky. I guess we could call we went from partly sunny to partly cloudy in the market right now, where heavier volume and across the board, we're seeing red. So this is a very big thing. You need to make that distinction on what kind of bigger picture are we in and how does that affect my profit-taking strategy. So for me personally, when I see an image like that and we have some good positions, and probably one of the better positions that we've had in the last couple of weeks has actually been in Wayfair on a breakout, which is super easy to see on the chart from where we got in. It was right around that 43 levels where we called out the trade, and now we've kind of shifted over into our trailing stop loss strategy, which we call the profit maximizer. But when you start to see these kinds of charts, you start to get a little bit more aggressive because the tape has changed. And that's actually something that we talked about on our weekly swing trade session, which we have every Saturday at 10 o'clock in the morning. We probably spent roughly 30 minutes talking about price action and volume and what you do want to see in price action to expect continuation and what you don't want to see. And what we ended up seeing in quite a few stocks last week, like I said, and I'll show you on the newsletter in a second, 28 stocks and 25% of that list was technology stocks, which are now pausing on heavier volume. Now, if you know, I'm sure you do, but I'm just going to review it a little bit. If you know basic technical analysis, light volume pauses, we get a push up, and a lot of people know it as a pennant or a bull flag. Light volume pauses imply nothing has changed and it's going to continue in that direction, right? But the opposite of that is actually what we saw last week, where we had heavy volume pauses, and that's not what we want to see. So you actually want to write this down and turn this into I don't have Post-its anywhere around here. Turn this into a Post-it pad moment where you need to know what you're looking for, and that makes trading a lot easier. So a heavy volume pause is not what we wanted to see. So again, getting back to some of these profitable positions that we've had recently, this is a scenario where you probably want to be a little bit more aggressive, maybe take some off the table if you had a good percentage move, or maybe just move up your trailing stop loss a little bit tighter. For some people, that could be last week's low. It could be a moving average, whatever it happens to be. Because the tape has changed, that means that you need to be a little bit more proactive in your profitable trades at this moment. And I'm going to point that out in a little bit more detail here, because I'm sure everybody knows, like, this pocket of opportunity over here with all of these semiconductor stocks and that artificial intelligence conversation, they really kind of lifted the market, and everybody was like, well, there's 7 stocks carrying everything. Is that good or bad? And it really didn't make a difference because of how strong everything was. But now those stocks have kind of pulled back a little bit, and that bid that's been under the market kind of working its way out. And you probably see that a little bit more in this stock right here, AMD, which again had this monster rally up here after the NVIDIA announcement, and that's coming off of NVIDIA AMD not exactly having great earnings themselves. They actually guided down after their earnings report, which is why the bearish gap happened, but then caught this rocket bid after NVIDIA reported and actually gapped up as well. But now you can actually see, again, basic technical analysis. This is the line in the sand, what we kind of call where it has to hold that level. And it did for a while, but each time it broke out, it pulled back really hard. And now we actually have what I would call a confirmed change of trend in AMD. Now, to map this out a little bit more, the stock has actually gotten clobbered. And again, basic technical analysis, it actually filled the gap over here. So filling the gap, we reversed on Friday. Now, again, it wasn't on bigger volume, but we did reverse on Friday. So the big test this week for AMD, and really maybe even the bigger picture here at some of these tech stocks, which is why we're going to consider some other stocks to buy today, is what happens when AMD, if AMD this week actually rallies and hits this wall again. If AMD rallies, which it looks like it's going to today, a little bit higher this morning, and hits this level again, and we start to see this kind of price action, boy, that rocket fuel, I keep calling it rocket fuel, that rocket fuel that actually took the stock market higher could have less likely profit potential, which means that money is going to need to shift over into other areas. So let's actually break down what that means. So we already took a look at some of the bigger pictures. So this list of stocks that you actually see right now, you might want to take a snapshot of this. And actually, I put this in the newsletter. I'll show you this in just a second. This is the list of stocks that meet that bullish criteria and are still valid. So it's a little bit of a different picture. This is the list, and I'll show you. It actually changed because it's early in the morning here, but this is the whole list. So you can actually kind of see how the tape is not exactly screaming green, right? We kind of work our way over into some more research, and we take a look at the last 4 weeks of price action. And let me actually zoom this in a little bit for you so it's a little bit easier to see. So this is the last 4 weeks. You can actually see a couple of weeks ago, just absolutely boom, off the charts, get long, hang on to those things, maybe even look to add to some of those positions. But now as we're working our way over the last 3 weeks, and specifically how last week ended, you can kind of see that that bloom is coming off of the flower, and now it's getting a little bit tougher. Now, I want to really talk about that for a second, because you see that we put these kind of stats up. And again, obviously, I'm doing this for everybody in our community every night. You want to be able to have some sort of metric, some sort of way of looking at the market that's saying, what are the current market conditions? Is it thunderstorm, or is it beautiful blue skies? Is it partly cloudy, partly sunny? Like, you need to know those kind of things, right? But why? And how does that translate into something to do? Being able to recognize the current market conditions will affect your initial position size. So in other words, do I love this trade and you get in there with a little bit more in the initial part of the trade, or is it kind of okay, or maybe it's reversing and it's starting to look really good? I'm going to give you an example of that actually right now. Okay, so let's first take a look at the stock that we're going to take a look at, which is this bad boy. Now, basic materials, you can actually see over here, is actually still negative, right? And if we kind of work our way over into how things closed on Friday, still negative. But we're going through the list, and this is really what good traders do, is you start to look for new ideas. Let me get that moving average off of there. You start to look for new ideas where you start to get clues from the price action, right? So we're starting to see CF. It broke this longer-term downtrend. It broke this shorter-term downtrend. But this is really the part that is the most interesting to me. Look at these volume spikes, and especially look what happened over here on Friday. These are clues that CF, despite the fact that the bigger sector hasn't really turned around yet, there is institutional attention here where on the rallies, we're getting heavier volume and closing near the high of the day and pausing on lighter volume. So what does that all mean, and how does that translate into the bigger picture of the market? So if we talk about ideas that we kind of like right now, but not necessarily love. So in this case, coming off of the bottom, breaking those two moves to the downside, that's pretty interesting, especially that it's happening on good volume. But the sector itself, it doesn't have kind of all the wind beneath its wings at that point. So that would be a little bit lower initial position size for me, looking to add as we get another push and another pause. So that push and pause actually is this kind of what we're looking at. You got a push and a pause. And look at the volume decreasing on that pause. That's kind of perfect. You get another push higher, volume decreased during these couple of days, pausing, especially on this guy right here. And now we actually came back with another big candle. So we're kind of working our way through individual stocks and comparing that to the overall stock market. So now let's kind of like dive into my take on what the stock market is looking like for me heading into this. Now, something that's really, really important, and I think a lot of people that trade and have a passion for trading, which I know you do, right, is that there's always two sets of decisions. And I think a lot of people kind of forget that second part of the equation, which is we have all of that information heading into the time that we're about to make that trade. All that information is like, okay, here's every reason I'm going to build that argument to put a trade on. But then kind of we forget that we got to make new decisions after the trade is put on. So actually, we started out today talking about the second part of that, which is how do we recognize the market conditions and what does that mean for position size and how do we manage those profitable trades? Like I said, for a swing trade, could be the last week's low, it could be the last day's low, it could be a moving average, whatever you decide to use based on the market conditions. So now let's actually break down the market conditions and then we'll kind of work our way through sector rotation to come up with some good ideas. And by the way, if you haven't been watching, I want to say this just in case I forget it. If you haven't been watching the residential construction stocks, oh my gosh, you got to start to pay attention to the stocks and where money is flowing, because the tech sector is not the only one that has had some just amazing, amazing price action over the last 6 to 8 months. So I'll just give you a quick look. I'm actually going to zoom out here and I'm going to go all the way back to last October. And if we take a look at some of these guys, you probably turn your stomach at this point, not knowing that you haven't seen it. But this is really what's important. And this is why I mentioned this. You need to do this kind of stuff every single day where you are actually listing out the stocks that are rotating in and out of certain groups, because you start to notice individual sectors starting to do something interesting. So we actually kind of just talked about there's Toll Brothers, there's Lennar, which is another big dog in that. Look at these pushes and pauses, and they just keep going, right? So the point that I want to make here before we actually start to break down the market is that, look, we got a lot of new people that come into our community. They kind of get behind the curtain. But sometimes there's a conversation around, I don't have the time. I don't have the time to do it. Well, why do you have a trading account if you don't have the time to actually try and make some money? It doesn't take that long, but look, I'm just going to give you a quote that I use all the time with myself personally. Obviously, there's a lot of studying going on in here. How you spend your spare time will dictate how you spend your future. And there's not even a question about that. So if you want success, you want that next level for your life, you want your life to change, I got to tell you got to find that extra 15 minutes to 30 minutes. Turn off the streaming services, turn off social media, and just do a little bit of extra work to find that extra 15 minutes to 30 minutes to basically treat it like a part-time job. It's a half-hour part-time job that you've given yourself because you're a money manager. So remember that. Don't use the excuse that I don't have the time. You will never have the perfect amount of time. But for those of you that really want it bad enough, your actions will speak louder than any excuse that you have. And I promise you, you will find that extra 30 minutes somewhere during the day to either read the research that I'm putting out or do some scans on your own. Because if you want it bad enough, you will find that extra 30 minutes. I promise you. So remember that quote. How you spend your spare time will dictate how you spend your future. And if you doubt that, go back 12 months and look forward and ask yourself how you spent all of your spare time the last 12 months. And ask yourself right now, are you where you want to be? So just make that one little change, pour a cup of coffee, get a notepad out, and decide what you need to do differently for that extra 30 minutes a day. So now we're actually going to work our way through the market. We take a look at a little bit of news that's obviously important. And how about this? Another downgrade for Tesla. This is the third downgrade. In case you just actually haven't been on top of the Tesla news recently, this is the third downgrade by a pretty big place in the last 2 weeks. Now, the stock last week actually had a pretty big move to the downside, but recovered very, very quickly here. So we actually got one downgrade, another downgrade, and then we kind of paused on Friday. But you know what? Who the downgrade is from matters a lot. And obviously, Goldman Sachs, that's one of the big dogs on Wall Street. So how much longer can Tesla and all this positive news about the charging stations and all these other companies using their charging stations, which is absolutely amazing news. I'm not saying it's not, but let's really put into context where these downgrades are happening and why the downgrades are happening. And very, very similar to what we're talking about in some of the tech stocks, which we just mentioned before with AMD. It's not that the story has changed. These are still stocks with really good bullish stories behind them. What we are talking about at this point, and what we're talking about from these downgrades or the change of trend that we're looking at in AMD right now, if it has maybe a 2 more day rally and then hits that wall again, what we're talking about is getting in them now, and what is the reward potential that's likely to justify that. So nobody is saying they're not bullish. So let's get those double negatives out of there. They are still bullish, but this is a really important thing that a lot of people miss is if I buy this right now, what kind of reward is likely? So we're talking about all of these tech stocks, and even now at this point, Tesla, and who knows, maybe even these home builder stocks that I just showed you. What is the likely next move, and what is the proper initial risk for that idea? So that's where a lot of these downgrades are coming from. So you got to really separate, has the story changed or has the risk reward changed? And I think that's really the big part of where these downgrades are coming from and why the bloom has kind of come off of a lot of the tech stocks. And we saw that big red screen there with a big picture. It's not that they are bearish. It's that the odds of going higher don't justify the initial bigger positions like maybe they did at the beginning of May, which a lot of these rallies happened. So let's kind of work our way through. Obviously, we talked about OPEC this morning, and is that going to affect airlines and cruise lines? You got to be on top of those stocks in a big way. And then obviously over here, the stuff that's going on in Russia obviously is a big part of that as well. So you got Russia possibly affecting the oil supply, and now you also have OPEC continuing to come out with news pretty much on a daily basis. But let's kind of break this down now and dive a little bit deeper. And by the way, when you click on this, you can actually grab your copy of this below. Make sure you read the options section here as well. It's a very, very detailed insight on the entire breakdown of what's going on, which, by the way, that's a whole other conversation. Let's actually talk about this just for 1 second. What do you think is going on with the VIX? The VIX is pretty much getting clobbered every single day, which is really, really bullish for the market. And actually, I'm going to bring this on a 5-minute chart just to kind of really bring this home. If you know the VIX actually is the fear index. And generally, when this is going down, the market should be like kind of screaming to the upside. And look what the market did last week. It really didn't. So there's a little bit, is there a disconnect there? Something to keep in mind. Remember what we talked about at the start of today's call, which is knowing whether or not something has changed. Now, again, you're never lost when you know what you're looking for. And a lot of people in the market, the stock market specifically, get overwhelmed because of all of the information. When if you really want to elevate yourself and see that consistency in the stock market that everybody craves, you got to really narrow down what you're looking for. So traders and speculators who see consistent gains and watch their trading account grow higher and higher, let's say quarter after quarter, we don't want to say day or week or anything, just on a regular basis, that consistency comes from what you're looking for. When you know what you're looking for, you're never lost. So think about that. If the market overwhelms you a little bit right now, you got to take a step back and say, what am I looking for? And that makes things a lot easier. So if we kind of work our way over, there's a disconnect there in the market. So that also would kind of make it a little bit less initial position size. And we kind of been talking about that as well. A lot of people have these profitable trades that have been going on for a while, but now the VIX is all the way down here. So the VIX all the way down at 14 implies, that's the whole point of it, implies that options premiums are a little bit less expensive 30 days out. So let's put these pieces together right now because it's kind of fun. We saw this heavy volume pauses. That's not bullish, right? Potential topping out. We saw a lot of these tech stocks way beyond where they might be called an optimal entry. And you have the VIX all the way down here at 13 and change. It's a little bit higher than that right now. So what you might consider doing, and again, everything we talk about here is educational purposes, but we want to try and talk about some really good thinking things through, right? Well, if options premiums are lower with that lower VIX reading, and you have some profitable trades, and it looks like the market might be topping out here, maybe some early short selling, maybe some profit taking, right? Maybe, look, let's face it also, Q2 is ending. So this week is going to be very stock specific because market pushed up. If you were a fund manager right now, let's use Joseph. Let's say Joseph is a fund manager right now. Would you be selling right now or hanging on? Like, what are the odds of the next move? They want to get paid. They want to look good this week. So we're probably going to end up seeing a little bit more of this week. So you got to really work your watch list. All right. So what does that mean for a trade? So let's just map it out. Profitable trades, potential reversal or pause right now, and low VIX. Smart traders that I've traded with at this point would be looking to hedge. And the easiest way to consider looking for a hedge right now would be using options. So make sure you dig into the newsletter right now. And again, you can grab that down here. John breaks down an entire thing in there about where the VIX is, what the opportunities are. But just think about this. If you buy put options, which make money when the market goes down, SPY put options, and they're inexpensive right now, if the market pulls back and you have profitable positions, the put options will be making money that you just bought inexpensively while you are holding on to your longer term positions and hedging on those. So something to consider with where the VIX is all the way down there. Now, everybody doesn't like to trade options. I'm just throwing some ideas out there for you. All right. So let's kind of work our way over into the entire newsletter. It's more specifically on the market. Okay. So this is a really big part of what we're looking at here. Something changed last week. Now, the only way to know something changed is to know what you're looking for. That's very important. I know that sounds so simple, but you'd be shocked at how many people are overwhelmed and confused because they're trying to read and interpret everything. You need to know what you're looking for so you know if it's there or if it's not there. So the way that we look at things, something changed. These are the things we need to notice. 28 stocks traded heavy volume pauses or ended in a reversal candlestick on Friday. The tape and the market is talking. So you can actually see here, technology made up 25% of that list. Okay, now here's the important part. I'm not necessarily calling a top, but the market sure looks like profit taking, and early short sellers are taking another stab at getting bludgeoned from this slow melt higher. It always reverses when you can't take the pain anymore. And if you kind of look at the charts, we blipped up, and all that bearish headlines and everybody saying it can't go, inverted yield curve just got this thing smashed. Now they probably puked it up at that point, and we're starting to see it come down in the other directions, right? So now why is this possibly happening? Well, it makes sense. Tech stocks are beyond reasonable valuations. It doesn't mean it can't go higher. We're talking about reasonable, right? The AI story and fund managers are looking to finish the quarter. Again, thinking all this through, right? It's not complicated. You just got to start to put the pieces together. This means many of them hit the bid last week. So that basically in trading lingo, if you happen to be in a trading office in New York City, hitting the bid means you're actively getting out of the trade, right? Hit the bid, take some profits, possibly early short selling, heavy volume, big red chart that we just showed everybody, right? And we have the end of Q2. And we also have the 4th of July long holiday coming up. So we don't have a big calendar of companies reporting this week either. So again, what is this week unfolding as? This week is unfolding where you really, really need to lean on your watch list this week and have them float to the top of that list, the best ideas, because it's looking more and more like this week is going to be kind of mushy, sideways, maybe even bearish. Okay, a third downgrade in a row for Tesla, which pretty much carried the entire consumer cyclical sector up by itself. Boy, that's a lot of work for one stock to do. And how many more of those downgrades, especially even from Goldman Sachs, that's a pretty big one. All right. So according to the research, 427 is the level of support we should see before traders come in and buy the dip. So essentially what we're looking for is this level down here. Now you can actually see where we drew the box here, where the SPY broke that uptrend, which basically, let's say, is from middle of May, where we kind of finally took off. And now we have that box, and it's a pretty wide box, but we're actually below that box right now. And as of right now, when I'm talking, the futures are actually lower as well. So now we actually have, are we going to head back into that box? Now, here's the big thing that I want to point out, and this is very, very common for those of us that study classic technical analysis. Everybody knows that a tighter, organized, less choppy bull flag are the ones that usually follow through. Usually. And that's actually what we got over here. So this one actually pushed, paused, and took off again, right? Now, best case scenario, this would have happened, but it didn't. We actually pulled back pretty hard. So what does that mean for open positions that stocks you possibly own? Well, for starters, doesn't necessarily mean you simply bail out, have your stop losses in place, and understand what kind of profit-taking strategy should be on the table right now. Okay, that's very, very important. Okay, and as we just talked about, it's a good time to hedge with VIX at historically low levels. And look where we are. We're all the way down, really nasty levels pre-pandemic, right? Some other news that's coming into the market today, OPEC, we just talked about. Futures are falling on Russia and obviously Tesla. So the big thing I want to talk about here, obviously downgrade from Goldman Sachs. CNBC reported that this morning, a really big deal. So what I'd like you to do, now it's Monday morning and we're mapping out the entire week. We're finishing up the Q2 right now. Go into the description, download your copy of the Daily Ticker newsletter, and you can see on the left-hand side over here, we actually have a couple of things here. We break down sector rotation, and then we also break down this big picture in the market and individual industry groups. And we kind of gave you a little bit of a heads up there. So get into there, click in the description below, download this, maybe watch this video one more time, and start to formulate how you plan to trade this week, especially with that heavier volume. So what you want to keep in mind right now is as Monday opens and the rest of the week opens, you want to keep taking a look at that big picture and see, are there any pockets of opportunity, or are we kind of like neutral, indecisive for the entire week? So what does that mean? That means that you have to recognize that in the moment and trade appropriate risk and position size for the market conditions. Some market conditions, let me actually show you this one more time, because sometimes having a visual really matters, right? So if we take a look at this here and we hop on over here, this is a really good visualization of when you should step up and when you're going to see a little bit more stock specific stuff. So when you start to have these kinds of things, you now know ahead of hand what's the proper position size and risk for the current market conditions. Super important. And this is really where trading becomes easier and quite honestly more fun, because you're on top of it as opposed to hoping something happens. In this particular case, when you start to do these kinds of end of day, let's call it research, but it's really just paying attention, right? You now go into the day saying, I know exactly what kind of positions are correct for this market condition. So I'm going to pull this up on the screen one more time just so you can take a snapshot of it. And it's right there. And this part over here is really what you want to take a look at, is going back over your trading and then coming into this week. What kind of risk did you take this week? And specifically the last 4 weeks. Those traders that can adjust their risk up and down and have the right profit-taking strategies, or stay in cash, quite honestly, if you recognize those kinds of conditions, those traders are the ones that will see their equity curve go like this, which is really a big part of what we do in our private community, which is helping you understand and notice it in the moment, not 4 weeks later. All right. Have an awesome week, everybody. Thank you so much for joining me. Make sure you click down in that description and get your copy. You can go to File, Copy, and Download and grab that. If we did a good job today, please do me a favor. Give us a thumbs up. Make sure you hit subscribe. And I want to say good morning right here. Thank you so much for joining us. I really appreciate it. Have an awesome day, everybody. Have an awesome week. I'll speak to you soon.